Thank you for joining us early this morning. We are elated to have a fantastic panel here at a very important time of continuing reforms in the Ethiopian economy. As you all know, Ethiopia has been undergoing a number of reforms. Over the last decade, we have seen quite a lot of economic progress that was driven by state investment, that was driven essentially by expansion in the construction sector and investment by the government itself as well as state-owned enterprises. That has delivered, again, quite a lot of results, but also it has more or less run its course, and it has the economy stuck in a number of imbalances that need to be corrected if we are going to continue to grow. And grow we must, because we are starting from a very low base, and there's a very, very long way to go forward. So the development policy of the last 10, 15 years primarily was driven by the financial sector, which availed quite a lot of financing and quite a bit of innovation in a way of making it cheap for government to borrow and invest in infrastructure. So the financial sector, again, was extremely important. Having said that, again, most of the Ethiopian population was still left out of financial sector. We have one of the lowest banked population in the world. Most of our population is not empowered through financial services, whether it would be savings or borrowings of any kind, and that has been holding us back in many ways. It has also been bad for economic development and for poverty reduction. So the 10-year perspective plan, which was recently approved by the government, the Council of Ministers, has charted a way to correct some of those imbalances and move towards more sustained and higher quality growth that's driven by productivity rather than capital accumulation, which is a very important driver of economic growth in the long term. Where we're trying to go is very far, and we don't have much time, so it's very important that the right things are done. Why we're here today this morning is to start to understand what that policy holds, the 10-year perspective plan, and the all too important financial sector. How is it going to calibrate itself to support a more private sector-led economy, a more inclusive economy that allows most of our population to have access to financial services and therefore allow them to grow themselves and hopefully achieve prosperity in a shorter period of time. So we would like to, we have Her Excellency Dr. Fiscal, who's leading the Planning and Development Commission as a minister in charge, who has been at the head of this planning process. We also have His Excellency, the Governor, Dr. Nagar, who has been leading a perspective plan for the financial sector as well. My name is Heno Kasafa. I am the managing partner at Precise Consult. It's good to see you all here this morning. This is the 8th or 9th time we've been doing this, and we are hoping that this very much driven, development-oriented, also very strong private sector that has resisted and actually survived quite a lot of tough times can now partner with government in a more win-win way to achieve economic development in Ethiopia. So with that context set, let me, I have to apologize first because the governor has an urgent meeting he has to get to. So I would like to start with His Excellency the Governor, if Dr. Fiscal would allow me. And I would like to ask him, just starting very high level, 2 questions. What is essentially the general context of the financial sector policy reforms that you are implementing now or finalizing now? And I would also like to hear if you could elaborate more deeply on the government's plan to include most of our population in the financial sector. As we all know, business models and technology is now making it available, and easier and cheaper to reach most of our population. So if we could start with those two, then we can go ahead later on with question and answer. So please start thinking about your questions ahead of time. Thank you.
Good morning, everybody. Thank you very much for having me. I would like to highlight some of the important financial and fiscal reforms that we are now implementing. As you know, we have developed the so-called homegrown economic program. That program has a number of components. From those components, the monetary reform, the fiscal reform, and the sectoral reform, and again, other reforms are also included, which will be explained by Dr. Fiscal later. So our basis for these reforms comes from this homegrown economic reform program. This program is and has been supported by IMF and also with World Bank, and a number of donors are also involved in the design and also in the implementation of this program. In the area of monetary reform, we have made some progress, even though we have a long way to go. Especially in the area of Forex, especially how the Ethiopian foreign exchange management should look like. I hope you know all what's going on right now. That area has to be one area that we should focus on. And in that area, we have developed a FX roadmap. That roadmap shows the steps that we should take in order to, reform the Forex management in the coming 2 to 3 years. So that's one area, and we have already started implementing it. We have also started taking some measures. Those measures are not measures that change overnight, but it's a step-by-step measure that we are looking at. The second area that we are working on the financial sector is the financial inclusion, which Henok was talking about. The financial inclusion, we are lagging behind in many ways in the area of financial inclusion, let alone comparing ourselves from other countries, even when we compare ourselves with sub-Saharan Africa. We are lagging very, 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 I mean, it's very amazing when you look at the figures. The adult population that have access to bank accounts, it's very low. So this area has to be another pillar that the financial reform has to focus. And in this area, we have made a number of measures. Of all those measures, we have approved the so-called movable property proclamation, which allows farmers and pastoralists to use their movable assets as collateral in order to access credit. In my view, this is a landmark initiative that will encourage our population. Most of our population lives in the rural areas, and if we create access to farmers and pastoralists for some kind of financial service, this will create a huge impact, positive impact on the lives and livelihoods of the Ethiopian people. This is one important reform that I think you would also, or rather I would also expect from you to get some kind of input in this area, how to implement it. We are working very closely with institutions like Ministry of Agriculture, institutions like those who take care of the patent right. We also work together with the financial sector, including banks, insurance, and so on. So, in the area of financial inclusion, it's not only collateral issue that we should take into account as a reform. The mobile money reform, or how to implement aggressively fintech companies in this area, is also an important area which we should focus on in the coming years. In our recent revised directive, as you all know, we have allowed local companies to engage in mobile money. That's the first step. We want local companies to be involved in the mobile money sector. And after looking at the progress, after looking at how far they have achieved, we are also ready to make some kind of change after some time. It's not open for the time being for foreign companies for taking care of, or in order to support the local companies, or in order to give some chance, I would say, for the local companies first. But in the years to come, we will do some more reforms as well. We will not be closed all the time for this kind of reforms. So this is one area which we are going to implement, and which we are going to focus as well. In the financial inclusion, we have also developed the so-called financial education strategy, which is an important reform component. This financial education strategy, this strategy has been approved by the board of the National Bank. We would like to create huge awareness among the public in the area of financial services and products. As you know, our farmers, our pastoralists, even those who live in urban areas with low income, have no that much background or awareness about the financial products and services. So this is an area where we would like also to work closely with partners, how to again create awareness among the public. The third point that I would like to emphasize in this financial inclusion is the consumer protection. We have our own financial consumer protection strategy. So many financial products and services, when they are availed by, by those financial sector, there are always some issues that should be taken care of. So in that regard, those who use the financial service and products, whenever they have some complaint, whenever they have some kind of dissatisfaction, there is a way how to solve these issues, and we have also developed this kind of mechanism in order to create some playing ground for the financial inclusion. So in my view, the next reform programs, in my view, should focus on the financial sector. In this financial sector, it's as you know, it's an engine for everything, and there is no question about that. So probably in our homegrown economic program, when we develop that program, you have heard about how the macro imbalance was a challenge because of the development policy we followed in the past years. Our financing was mainly from loan and credit, and that has created a lot of mess in our macroeconomic financial system. We will not allow this to happen again. So we have to correct the imbalance, and also we have to also encourage the growth as well. So correcting the imbalances and at the same time sustaining or maintaining the growth we have seen in the past years. So these are the two objectives of the homegrown economic program. So in this area we are going to focus to avail a huge resource for the private sector. In the past years, a huge amount of credit from the banks goes to, especially the state-owned banks, goes to the public sector, to the state-owned enterprises, which crowds out the private sector. So in the past 2 years, we are now seeing a huge number of figures for the private sector in the area of credit, for instance. And we will encourage this as well in the coming years. And we are downsizing the amount of credit for the state-owned enterprise, because now we are focusing on finalizing the ongoing projects. We are not initiating new projects which can consume another resource from the commercial bank or other banks, other state-owned banks. So this is one area which we have made some shift when we talk about the balance between the private and the public sector resource allocation. Another area which we encourage the private sector is the so-called, as you know, the public-private partnership. In this area, we focus on energy sector, infrastructure, and in many other sectors which the private sector can be involved. So we highly encourage this initiative as well, and I hope in your discussion you will raise this issue as well, how to make it more visible, more conducive for, especially for the domestic investor as well as foreign investor. So these are some of the reforms in the financial sector. We are now developing a 10-year financial sector roadmap, which we are going to also discuss with you at some stage when we think it's right to discuss on it. We have developed the draft. So we, in that roadmap, we are going to envision, or we are going to see what the Ethiopian financial sector should look like in the coming 10 years. So if we have that vision, it will be clear what we should do for the next 2 years, for the next 5 years, and so on, until we reach the last 10 years. One last point, in the financial sector, in the banking sector, as you know, we have encouraging interest-free banks, Sharia laws that are compatible with Sharia laws. These banks and financial services and products are very, very important for financial inclusion. We have given one license for interest-free bank, the Zamzam Bank. Probably you have heard about it. There are other banks that are on the pipeline to be licensed. In our view, licensing this interest-free banking will encourage our brothers and sisters from Islamic religion that are not, I would say, comfortable working with the classical bank system. They were complaining because of these religious issues and principles and so on. They were complaining for a number of years, but now we have allowed these banks to be operated in Ethiopia as well. So this is also an important reform area, in the banking sector which encourage financial inclusion. As I said it in both rural and urban areas. One last point before I hand over my mic to Henok is that as you know, our diaspora were not allowed to engage in banking sector, in insurance sector, and other financial sectors. And from the reforms we have made or we have taken, Ethiopian diaspora are allowed to engage in any financial sector without any restriction or limitation. This is also an important area, by the way, to encourage not only dollar, but to encourage know-how, technology, and to draw those professionals that have the experience in other countries and to invest in our financial sector. This is also an important area which we should focus as well. And we have seen a number of progress in this area as well. In the banks, special under formation, we have seen a number of diaspora guys who have a share in the newly under formation banks. So we highly encourage this. I mean, there should not be any restriction in this area. So overall, what I would like to highlight to you is in the financial, in the banking and in the insurance sector, as well as in lease capital. In the lease capital, I would like to emphasize one point. It's open for everyone. The only sector which is open for foreign investors is the lease capital. We have licensed one, probably you have heard about it, Ethio Lease. This company has or is working in many sectors, in agriculture, in providing machineries, in the health sector, in providing MRI, so many equipments. So we highly encourage as well in this area to see more and more lease capital companies, especially those foreign companies. But when we look at the number of lease companies, the growth of the companies is moving very slowly. I don't know why. We would like to investigate, review, and do some kind of research in this area to encourage the lease capital. But there is a huge potential in this area which we should also consider very much about the progress of this lease capital. So overall, we are encouraging as well the formation of capital market. We have drafted a proclamation for the establishment of capital market authority, and we have sent this proclamation to the Council of Ministers. When it is approved, and both at the Council of Ministers and at the Parliament, it will go operational. For us, this is a big economic reform. Once it's implemented, it will create a number of opportunities for the capital market, for the investors, even for the government. I mean, instead of asking some kind of direct advance from the National Bank, the government can also mobilize resource from the capital market as well. So this will create a lot of opportunity for the government, the private sector, and for everyone. You know that in the area of capital market, even most African countries have a capital market, and in our case it was started some 40-50 years ago in some form. Probably some of you know about that. For the last 40-50 years, there were studies, so many studies on the shelf that I have seen. So we should not wait another 1 or 2 years. So we I established a team that can conduct a review and draft the proclamation. We were supported by international experts for the drafting of the proclamation, and we did a very fantastic job in this area. We have also established an advisory team as well. Those team members who are very familiar with the capital market, who have, some kind of activity in US, Europe, in the capital market area. So that's also another reform area which we are going to implement in the coming months. But overall, our reform pillars are also indicated in the coming or in the upcoming financial sector roadmap, and I hope you guys here can also contribute or give us some kind of feedback on what's going on right now, and definitely we'll also encourage you to participate in our upcoming meetings to look at what the private sector really needs and what we should take into account. So overall, the reforms are going very well, and we will aggressively work, speed up the pace, and we will do some remarkable progress in this sector as well. Thank you so much.
Thank you, Excellency, for that very succinct overview of what's happening in the financial sector. As we all know, there's quite a lot happening. You've all been very busy. I have a number of questions, but I'm thinking since we're going to lose the governor soon, I would allow you to ask questions. I think there's quite a number of people also joining us online who might be forwarding questions. So if there's any questions for the governor, please bring them to me. Let me give a chance to you all in the audience first. Hands up. Not that many questions. Okay, let me start with Yosef. If I can get a microphone over there. Please introduce yourself and keep the comments as brief as possible so we can get more questions in. Thank you.
Thank you, Anok. Good morning to you, Governor, and distinguished guests here. I would like to ask, my name is Yosef Nawai. I am the CEO of Ethio Canadian Business Group. We are engaged in the construction and as well as the telecom sector, and looking forward to get into the financial sector as well. A diaspora came to Ethiopia like 23 years ago. I would like to ask some questions with regard to the financial sector inclusion of the diaspora. As far as I know, the diaspora is allowed to invest in foreign currency in the financial sector as of now. But there is nothing that would allow this investment to be repatriated as dividend repatriation. I don't know what this situation is. The next thing is that if the diaspora is allowed to be in directorship situations, in like board of directors, can they actually participate in that? There is the other thing is, like me, there are some diasporas that have severed their relationship with the country that they came from. Their economical situation is all in Ethiopia for the last 20, 30 years. So are we allowed to invest in Ethiopian currency with respect to the financial sector? And the last one is like, I know of people who have invested in the financial sector and all their kids are foreigners. Like, are they going to inherit this investment in case of the passing of their family? Thank you. Inheritance. Inheritance, like if foreigners who are foreigners who have Ethiopian parents who have invested in the financial sectors, can they inherit the shares of their family?
Thank you, Yosef. I will come to that side. Ojuna first. Again, please introduce yourself and be as brief, more brief than Yosef was, so I can get all the people I've seen hands.
Thank you. My name is Ojuna. I'm coming from Komari Beverages. My question is very simple. You have some great initiatives, especially when it comes to collateralization for farmers and pasteurization, and also for raising of the capital market. What's been done to go in parallel downstream in terms of building capacity for the supporting industries? For example, there's always differences in terms of valuation of assets, even now, when it comes to buildings, et cetera, in terms of collateralization. What's been done downstream to kind of train engineers, train lawyers when it comes to doing claims, et cetera, where a lot of litigation and processes are dragging along? Because you guys are streaming ahead very well, but I fear that the supporting industries is going to lag behind and bring your progress to halt eventually down the line when you guys have very big dreams. So maybe Dr. Futsum can add to this. In terms of planning, what's being done for the other stakeholders to bring up the capacity to support all of these initiatives?
Thank you. If you can pass on to Yilabas. I'm working my way. Just keep your hands up on the left side also. I'll come to you. Over here. You'll go next.
Right. Thank you, Enoch. Thank you, Your Excellency. My question is regarding the mobile money and Ethio Telecom privatization. As part of the privatization process of Ethio Telecom, 40% will be owned by the foreign investors, whereas Ethio Telecom is establishing a mobile money company. So does it mean these foreigners will be part of that 40% of the mobile money company to be established? Or is there any other mechanism? How will it be managed? Thank you very much.
Thank you for also being brief. Yilabas from Eat Switch. Hamrat, and then I'll come to this side. Yes. Ababa, then Kidacho.
Okay, thank you so much, Enoch, for your continued support to getting the private and the public policy makers together in this case. My question is the Honorable Governor, Dr. Inagar. It has to do with, my name is Tamrat Bekele. I'm from ICL, International Clinical Laboratories. My question is about foreign currency and foreign currency account for non-resident foreign companies. Are these accounts subjected to the 70-30% basically retention as a retention account? If that is the case, if these are non-resident accounts and they're supposed to be kept as dollar-denominated accounts for specific purposes, why would they be basically subjected to such a thing, which has a huge impact in foreign companies bringing all the money they need? It will force us to keep monies outside. So.
Okay, I'm going to take two more questions, and I'm going to allow the governor to generally respond. Abdullah in the front and Getachew in the back.
Thank you, Enoch. First, I would like to thank His Excellency the Governor and the Commissioner for actually taking the time to be with us this morning. I can't tell you how good it feels to be finally asking the government questions. I was, until recently, at the receiving end of questions, so I'm enjoying the newfound freedom here. My question is actually in relation to the lease financing that has been implemented so far. I hear from a number of investors that while the government claims this has been liberalized, the regulatory restrictions around lease financing make it almost practically impossible for anyone to have interest in the sector. Is there any consideration on the part of the National Bank to actually ease some of these restrictions that probably have made the sector unattractive to private sector investment? Thank you very much.
Thank you, Ababa. And last question, be as brief as well, to Getachew in the back. Apologies, it's just a lot of pent-up questions. I know you have to go.
My name is Samuel Getachew. I'm from The Reporter. The question I have is for the governor. You know, we've been traveling all over Ethiopia, looking at farmers of Ethiopia and how little they produce in a nation that imports much of the food products. So you touched a bit on Ethio lease, and we're visiting one of their projects not far from Addis Ababa. I want you to tell us exactly what the vision is, you know, maybe the 5 or 10 year vision for a company like Ethio Lease, which is highly supported by donors and investors. And I give us a brief vision of what you see it doing in Ethiopia. Again, a country that imports much of its products from outside, and a country that has forex shortage. Thank you.
Then thank you very much for all the questions. If I may start from the last question about the lease. As I said it before, this is the only sector which is open for the foreign companies, foreign investors. No foreign company or investor is allowed in the banking sector or insurance or any other financial sector. So yes, as Ababa said, the directive was a bit problematic, the first directive. After I became a governor, we tried to revise it again and again, based on some of the recommendations from these investors. But still, it may not be exhaustive. There may be some problems from the regulation point of view, but there will also be some problems from the investors' point of view. Sometimes they ask questions that are not important for the private sector. So we are very careful to balance and create some conducive environment for these companies. And yes, we will look at it again. A study is going on the directives. And in my view, I would like to see, or we would like to see more and more lease companies from Europe, from America, from anywhere. So we have to create not some much conducive environment for these companies to operate in Ethiopia. So far, the progress is not moving fast. I agree, and we are studying it, why this is happening. After looking at our assessment, we will do some changes on the directive. On the foreign currency issue, as you said it, we have allowed foreigners to have a saving account. This was not allowed this was not allowed before, and very recently we approved a directive which allows foreigners to have a very attractive, with a number of benefits, this so-called FX saving account. In our view, if this saving account is implemented, it will attract some foreigners to save their currency, foreign currency, in Ethiopia. Let alone foreigners, even Ethiopians who earn FX, those who are working in African Development Bank, African Union, UN agencies. As you know, they don't want to save it in dollar or in other foreign currency. So after studying and looking at and discussing with non-residents and those Ethiopians who work with regional and international agencies, we designed a mechanism how to attract those individuals to save their dollar in Ethiopian banks. We will briefly, not briefly, but in detail, explain what the benefits of these saving accounts for these individuals. In the area of retention account, we have made a lot of progress. In the past, it was, for instance, if you are an exporter, you are allowed to use 30% in the form of retention account. But that forex amount in the retention account was used only to the sector you are engaged or you are working with. If you are a coffee exporter, that retention account, 30%, will be used if you want to use or buy any equipment that's related to coffee processing. But now we made it open. That means everyone can use the 30% retention account to buy or import any manufacturing input. This will definitely help, probably to some extent, manufacturers to use their account for the purchase of these inputs. It's also the same in other areas which we allowed the retention account. We have made a lot of progress in this area. Very quickly, another issue on this Ethio Telecom privatization. Two areas in telecom. One is privatization. The other is issuing licenses. In the privatization and also in the licensing area, in both areas, foreigners are not allowed for the time being to work on mobile money. So bidders compete without these mobile money services. This mobile money, as I said it before, is for the time being allowed for domestic investors and for locals. We have made it clear this for those who have a potential to buy the licenses and who have also the potential to be involved in the privatization process. On 2 points on this banking sector, we made that reform regarding involving the diaspora to invest in the banking and insurance sector for 2 reasons. Number one, Ethiopians, whether they live in Ethiopia or abroad, they have the right to participate in any activity in Ethiopia. So banking should not be an exception, or insurance should not be an exception. That's one point. The second point, Ethiopians should also support the growth of Ethiopia by investing in dollar. You have raised, or you were asking about the shortage of FX. So we also encourage the Ethiopian diaspora to invest in dollars, not only to support itself, but also to support the Ethiopian economy as well, and in order to minimize or lessen the impact of forex shortage. So we want the dollar. That's one why we encourage the diaspora to invest in the banking and insurance sector. As an Ethiopian, our directive does not allow to repatriate in the form of dividend or profit in dollars. We encourage Ethiopians to get it in the local currency. This is simply not to hurt the diaspora, but to engage more the diaspora to invest in any activity as long as the investment in Ethiopia is in local currency. So please consider this issue. If we allow the Ethiopian diaspora to repatriate the dividend in the form of dollar, what's different from the foreigners? That's the question. As an Ethiopian, the diaspora has to support the growth of the Ethiopian economy by remittance and through other investment means. At the same time, to differentiate the Ethiopians from other foreigners, the investment, the repatriation has to be also encouraged in the form of local currency. That's why we revised our directive to invest in dollar and to get the investment, dividend, and profit in the form of local currency. That's the background. My second point about the inheritance in the banking and insurance sector, there are some issues, there are some cases that I'm hearing before the revision of the recent banking proclamation insurance and those that were invested before. Okay? Before we allow the Ethiopian diaspora to invest in banks and insurance, there were also other diaspora guys who invested knowingly or unknowingly in the banking and insurance sector. The proclamation doesn't allow, but somehow those guys or those diaspora people, they have invested in some form. They are asking us to get that investment, but in this discussion platform, I will not say this and that. It depends on, or rather looking at this issue case by case. So after the revising the proclamation, that's not a problem. But before that, if there is some kind of investment in the banking or insurance sector, and if there is any kind of inheritance case through the court system and through other means, we will look at it case by case. So that's my view on this. My final point, before I leave this room, on the financial inclusion, I would like to emphasize this, especially for the diaspora. I want to see more diaspora to engage in mobile money. I don't know why I don't see more. Still, if there is some problem, I would like to hear your views on this. I will love to receive your comments and views through Henok and other organizers tomorrow or after tomorrow or the other day. Why the diaspora is not investing in mobile money, the Ethiopian diaspora. Even not only the Ethiopian diaspora, even we have allowed anyone to invest in, to become or to invest in ATM POS, in many other areas. In the past, it were the financial investors, not the financial sector, that were involved in providing ATM machines, POS, everything. Our directive now allows also non-financial sector or companies to engage in providing ATM machines, point of sale, and any service related to this. Why people are not investing on this sector or on these areas? So there are a number of questions. There are a number of directives, reforms that allow Ethiopians, especially the diaspora, to be engaged. And for us, we are open, and especially we would like to every time discuss with those who have the know-how, the technology, the experience, and to move our reform forward. Thank you very much.
Thank you so much, Excellency. I know you have to go. We will take that request very seriously. There are quite a number of people interested in this sector. Somehow it's not translating into acts on the ground. We would be very happy to create that platform to have a meaningful dialogue on it. Having said that, please join me in thanking the governor. He has squeezed out time out of his very busy, very busy schedule. So please allow him to leave us at this point. Thank you. Okay, so I will start with thanking you for listening with the rest of us in patience, as we had to take advantage of the governor's early time. But there was a ton of questions I think are probably even better addressed by you that could have been arisen from this conversation with the governor this morning. I want to basically start from the top. If you could tell us what is the ambition and the goal of the 10-year prospective plan, and how do you see reforms in the financial sector basically supporting it?
Thank you, Enoch. Good morning, all. Yeah, I really would like to start from the ambitions of the 10-year perspective plan, and of course the vision speaks it all. An African beacon of prosperity, and when we say prosperity, the underlying word in this vision really talks about the prosperity in all its dimensions, not only monetary prosperity, economic prosperity, but all the dimensions which really speaks to shared prosperity, not only prosperity of the the few selected. So this is the ambition, but to really support this ambition, there are about 10 pillars which are really crafted very well to support the achievement of and the realization of this vision. Generally speaking, these 10 pillars, unlike previous development plans that we had crafted, include all dimensions of prosperity again. They are not only economic heavy, they do not only speak about economic development, but also include institutional transformation related issues like peace, access to justice, building inclusive institutions. In fact, economic development related issues are also there, but there are also huge departures in the way we really want to do, our development this time around. To mention few of the pillars, we have, for instance, the first one, quality, growth, and shared prosperity. What makes growth, a quality growth, as opposed to any, type of growth, or as compared to the, the economic growth that we had registered in the past 10 years. So there are several attributes that I can mention, but to say few, so the growth should come from sources which really address the structural supply side problems that we have. We have like agriculture, manufacturing industry, mining, ICT, the modern sectors. Henok, you earlier was mentioning about, you were mentioning about the growth that happened in the past 10 years, coming from the huge and heavy investment in the public infrastructure, which really happened, in fact, by the government. But this time around, growth should continue. Ethiopia should stay in high growth trajectory because we have lots of homework in terms of development. But that growth should come from areas that really address the supply side problems. That is one of the characteristics of the growth, which makes it quality growth. The other one is, it should be inclusive in the sense that, it should ensure participation in the process as well as in the outcome of, the development activities. So in terms of job creation, for instance, it should result in decent jobs. It should happen in really environmentally sustainable way. And also, the economy that we want to create is a resilient economy which withstands any shock. For instance, we have really seen what happened during COVID and also other shocks, drought, the desert locust, we have the flood. These all shocks will happen every now and then, in the years to come also. But we should be able to create that resilient economy. Another one, pillar that we have talks about sustainable development financing. The economic situation, that we are at the moment, in fact, really better than, the situation that we were 2 years ago. But, most of it was explained by the way we financed our development in the past 10 years. The macroeconomic imbalance we had really could have resulted in full-blown crisis, but we really crafted a good reform program, the homegrown economic reform program, which is really addressing, the rebalancing of that imbalance that, the way we financed our development created. So this time around, development should be financed in a sustainable way, in a way that, domestic revenue sources will be given big priority, and also financial inclusion. We have been talking about the financial inclusion. In Ethiopian context, when we talk about financial inclusion, I personally believe it's not something we do as favor for, the people or for the sectors that we think are not included in the financial sector or the services, but we really believe we have lots of potential in that area, in mobilizing resources, in mobilizing saving, which can be used, as a source for the huge investment that we need in the years to come. So financial inclusion is really important in that regard, and digitization is one of the tools. In fact, we have to shift from the old way of doing things, and financial inclusion, we have seen in neighboring countries how digitization really helped in, fast-tracking the financial inclusion objectives they have. And the other thing we really consider in sustainable development financing, in our sustainable development financing pillar, is efficiency gain. Again, the way we really undertook our projects, our investments, our initiatives the past 10 years were not really efficient. We had lots of time and cost overrun. The projects which were supposed to start producing and really start selling, the products to the market and address, the supply side problems that we have are now stuck somewhere, and the capital that we had invested there is now can be considered as a dead capital. So efficiency gain, we have a lot to work on those areas, and so these three components are areas that we want to work when we talk about sustainable development financing as a pillar. The third pillar is digital economy and technological capacity. The fourth industrial revolution is coming, and it's going to be digital revolution. So in which case we should get ready. We are starting from very low base, both an advantage and a disadvantage if we don't start really working on it now. So we really have to work in all areas to really build the technological capacity if we have to bring sustainable growth, sustainable development, and digital economy, in fact. So technology as an enabler, and as well the digital economy as, one source of growth in the years to come. Productivity and competitiveness is another pillar that we have. So we have to sell, we have to trade. So our private sector and, Ethiopia as a country, when we see, our country in the global value chain, in the global trade, we are really challenged when it comes to productivity and competitiveness. So we have to work on that area, and that's the fourth pillar. The fifth pillar is an equally important pillar, private sector economic leadership. So, as I've said earlier, most of the growth sources really happen in areas which are really inherent nature of the private sector, investing in agriculture, manufacturing industry, mining, ICT, tourism. So now, which really naturally goes without saying that, the Ethiopian government is relying on the private sector in achieving the goals and the ambitions that are set out in our 10-year perspective plan. So these are some of the pillars, but again, we have 5 more pillars which really speak to institutional transformation, issues of capacity, because we really don't want to take them as assumptions, underlying assumptions that should just happen, as we really implement our economic heavy development agendas. We really wanted to put clear goals, clear targets, and really want to follow up with clear performance indicators. So we talk about sustainable peace building, justice, you know, access to justice. When we say access to justice, not only about the criminal related, but administrative justices. And we talk about institutional reforms in the rules and the regulations, you know, the rules of the game, being able to, you know, have predictable policies and creating enabling environment to the investment and to the business, yes. And of course, inclusive institutions, so we also need those. So our pillars really are comprehensive this time around. The financial sector will definitely play a major role. It will be like I had a professor who used to say, you know, asking what's the role of the government in development is like asking what's the role of water in quenching thirst. You know, the role of the finance sector is, you know, is huge. It's the fuel, and very important fuel in that regard. So the achievement of the goals and the ambitions and, yeah, the targets that we really have on our 10-year perspective plan require huge investment from the private sector. You know, most of the investments are planned to come from the private sector, and as well, lots of initiatives, lots of projects, in fact, from the government too, because there are lots of backlogs in terms of, for instance, infrastructure development, in terms of, yes, leaving no one behind, for instance. There are lots of regions lagging behind compared to some other regions. So the government also needs lots of finance in this regard, and so the role is really huge, and we really need a clear strategy in that regard. You know, we really didn't want to leave the financing details to imaginations, you know, and assumptions as well. So we are working on a separate auxiliary document, which really helps in operationalizing the 10-year perspective plan, which details out the financing envelope, the requirements, the sources. So then only we can really work on the binding constraints and prioritizing, you know. This all really comes together only when we have, you know, worked out all the details in terms of financing, and that's really important. In terms of direction, for instance, you know, this 10-year perspective plan sets out the long-term directions. So it is a policy document. It sets out, you know, the strategic directions. It also really shows the political economy, how the political economy would look like. So in terms of financing, we really want to see how, for instance, the Asian economies grew and how they really took financing related issues and how they really managed the financing sector, the financial sector, in terms of facilitating the development activities that the government had. So going forward, the sources of financing as well as the use of financing will seriously be watched. I mentioned about sustainable development financing. The sources of financing should, you know, be adequately sustainable, not to create macroeconomic imbalances in the process, and also the sources should be really sustainable enough. Most of it should come from, you know, domestic sources, more than 80%. And again, other innovative way of financing. Earlier, the governor was mentioning about the public-private partnership, joint ventures, and for instance, one of the areas that would be addressed by the homegrown economic reform in that framework is really working on the equity financing, which we have not been tapping at all. So by the end of this, you know, implementation of the homegrown economic reform, we'll be establishing, capital market, which will give access to, other alternative source of financing. So this all should really be worked out very fast. So yeah, I think I've addressed the points. I'll come back to the rest, if questions are raised, yeah?
I'm sure there will be some questions, Excellency Dr. Fisum. Thank you for that high-level sort of overview. I think there's so much there, it's difficult to cover it all at once. I think it's all very clear. I want to ask two important questions, one on inclusivity and shared growth. I think that's very important. If we look at most of the statistics in Ethiopia, we're not doing so well in terms of sharing with with our population that's especially further away from Addis Ababa or the major cities. And if we look at financial inclusivity, less than 30%, just looking at bank accounts. And as you mentioned, it could be a fantastic source of domestic savings, basically money that could be used to borrow for the private sector as well as for the state to drive more economic growth. But that hasn't happened. If we look at electricity, I mean, access rates are relatively higher, but people who are actually connected, it's still less than 30% or so. If we look at even the financial sector's approach up to now has been, we've had a negative interest rates for a very long time. So even the 30% of the population that's saving in an economy that average saving is between 7 and 8% saving deposit rates. And the lending rates are actually below inflation. Inflation has been stuck around 20% now for far too long, in my opinion. So the 250,000 people or so who have borrowed, that most of those are actually microfinance, but there's a few that have the small number of private sector people responsible for a good number of the loans. Again, we're still talking relatively because most of the money was going to the state sector. It's sort of penalizing the masses of the 30 million or so who have bank accounts. So that's an issue again. So if we go across all the sectors, perhaps with the exception of education and health, most areas we're falling behind. We're behind. And it's not for lack of strategy. So the question I wanted to ask is, there was a financial sector inclusive financial sector policy and a strategy that ended this year, which is being reviewed by the National Bank. It had lofty ambitions, and it set up an implementation infrastructure that looked like it had the capacity to implement, but then not much really happened. So all this long-windedness to say, how do we ensure that the government is capable of implementing these high ambitions, these lofty goals that are set, actually very specific goals that are being set? That's one. And the second one regards to structural transformation. Something similar again, our Dr. Fisum, you mentioned the experience of the Asian nations, but I mean, if we go even way back to the US or Germany or Japan, most of what happened is agriculture was transformed and then was moved into manufacturing. So the question is, and I know we're working with the Ministry of Agriculture also, and we have a number of studies where we're trying to figure out how is it government's financial sector policy can ensure financing is available to this agriculture sector. Has not been available. There are a number of movements like the movable collateral system that will go a long way if implemented widely. But if we leave it all to the market, and I have often been accused of being too much market. In this case, it's a little different. If we leave it all to the market, agriculture being a difficult, lower return, higher risk business, quite a bit of the money may not go into agriculture. Manufacturing, we have a number of manufacturers even in this audience, despite it being the stated priority for many years, has been extremely difficult to pull off. And so without that, structural transformation is not going to happen. So what I wanted to ask is, how do we plan on ensuring that adequate money is being channeled into these very important two sectors that are important for transformation, but also are important for inclusivity and reduction of the poverty that we see across? Very long-winded questions. It's not very like me, but let me stop there. And should we address them, or should we also take one or two questions? Yes, let's take a few questions, and then I think since our time is also running, we'll address them all at once. Since you're taking notes, I'm confident. Please introduce yourself, where you come from, and be as brief as possible. That's the rules.
Thank you very much. My name is Tadeze Talaun. I'm the CEO of National Oil Company. I'm very much excited about the focus to the private sector, in particular to address the supply side, the productivity, and the efficiency side of it in that context. But we have a problem. The private sector access to investment in terms of energy area, it could be also in other areas. There are some limitations. The government side about lease capital, which is part of that, which is good. But in terms of longer term one, it's only the government that can borrow money from other outside to invest, even in critical energy areas as well. In my case, I have a critical project on my hand, which I could not manage to handle because of, even with the collateral available, with the capital already earned locally, we could not get access to the foreign, to loan capital from outside, because it's only the government that can borrow money from outside. How would that be addressed in terms of the private sector investment? Thank you.
Thank you, Ato Taddesa. Any more hands? I see two here. The gentleman in the front and Yildik Al in the back.
Thank you. My question is...
please introduce yourself, where you come from.
Okay. My name is Sirak. I came from NEB International Bank. My question is just regarding the African Continental Free Trade Area, which is going to be commenced just after a couple of weeks, just at the beginning of the new European calendar year. So it is the biggest free trade area that incorporates the 54 countries of African nations, more than 1.3 billion people, and it has lots of potential. So does this opportunity is considered while preparing the new plan of the 10-year new plan of the country, since it has lots of opportunities and pros and cons, even in the financial sector, the import-export sector, and other related sectors? Thank you.
Thank you, Sirak. Yildik Al in the back. Any more hands?
Thank you, Enoch. I think this platform is very useful and is much appreciated. Also, thank you, Dr. Fisum and the governor, for giving us an overview in the topic that's selected for today. My questions are, and a suggestion, a couple suggestions. The first one is, I think sustainability was mentioned in the next 10-year perspective plan. One area I see can make a difference in making interventions sustainable is if, for example, there are a number of institutes established, LEDI, MEDI, and so on,
currently these are largely and exclusively run by the public sector. I think it will make a difference if these were jointly owned and run by private and public sector. That is just a suggestion. The other questions I have is, given now, there's a shift towards digital generally in Ethiopia and elsewhere, and as the gentleman mentioned, there's a Continental free trade area that Ethiopia has signed up to. What would, if there is any consideration, what would be Ethiopia's outlook on, for example, a digital currency? Making birr a digital currency. I think the countries that are prepared with this kind of more traceable open connections will benefit when the open market comes into operation. I think as of starting this January, but it may take some time. I would like to hear your outlook on that area. The second thing is, I appreciate the time and the engagement that has increased by the Planning Commission to get input from private sector and others when they were making the 10-year plan. It's a very good initiative. And I know there is an effort to have a skills planning and anticipation exercise alongside it, very valuable. And in that area and with today's financial sector, it would be interesting to hear what, for example, for the governor perhaps, has been taught in terms of increasing the skills base in the financial sector, for example, in actuarial sciences, in fintech, in the education system, in SME financing and modeling, in securities. So in all of these areas, Ethiopia doesn't have a school that produces skilled people. So we're largely relying on diaspora returning or expatriates. So perhaps, Henok, this is an input. While doing these initiatives, this thing parallelly should be planned for to fill the skills required in the occupations. The third question, and is a suggestion because the governor asked at the end, why are fintech companies or diaspora not involving in fintech? What would be, is there any consideration done to address financial inclusion about using existing traditional structures like the DERS and ICOPs? So there's a level of trust that's built around them. I think if there is some kind of formalizing that happens with these digital initiatives and so on, they can take the effort fast and far. And to answer his questions, I think this is my perspective on why it might be. A key part, I think, is the lack of interoperability. And I feel ETH Suite should be supported, and that coming into force, I think, will expose some inefficiencies, and that's perhaps why some of the financial institutions and the banks are not, or maybe pushing back a little bit, but it's worthwhile because the price for the economy in the country is higher than the small price financial institutions will pay if the interoperability is allowed. And there's also a big question of when Ethio comes into mobile money, will I still be able to exist? So I think there has to be a little bit of thinking around that to increase the comfort level. Thank you.
Thank you, Yilikal. You didn't introduce yourself, but
Sorry.
I'm gonna take a couple more questions, and we're probably not going to have another round to take because our time is running. So over there, and oh, I'm sorry, I forgot. Mayur in the front, and then we'll go to response from Her Excellency.
Thank you very much. My name is Solomon. I came from Ahadu Investment Group. My question is particularly, we who are engaged on industry or manufacturing processing. We do have serious shortage of raw materials. This shortage of raw materials, not only shortage, time to time there is increment of price, and there is a serious inflation on this regard. Immediately, if it requires a solution by the government, particularly for this homegrown policy, how are you going to address the shortage and the inflation, in particular for the manufacturers? The other and important issue is to enhance the capacity of the production. We require a capital investment. How do you address this capital investment, particularly for supporting of the local manufacturers? The final one, when we invest our part in requiring a support from financial institutes, there is a serious shortage of forex. How are you going to address this issue, particularly for the local manufacturers? Thank you.
Excellent questions to Solomon. Manufacturing industry, as we spoke about, I think it sounds like this policy is going to require these two sectors to take off, and important to engage with investors like yourself. To another manufacturer, Mayur.
Thank you very much, Henok. And first of all, thank you very much for organizing this wonderful forum. And thank you, Your Excellency, for the wonderful enlightenment that you've given us on the new 10-year plan. It's really encouraging and refreshing to see the focus on the supply side for the growth, and also for the increasing productivity and competitiveness, which are also very important pillars of this. I would like to know what exactly is the importance that you've attached to import substitution, because what we've seen is we have often talked about it, but I think it just remains on paper, but we haven't seen any real programs which would have supported import substitution. And the focus has always been on exports, and even nascent industries are expected to perform from day one into exports, which practically is not really possible. What I would like to see as an investor is encouragement for building, as you said, productivity and competitiveness, which will come mainly by building up your economies of scale. And the economies of scale will come when you really support these industries which have sort of a scope of import substitution. In many cases, we have seen that imported products are being encouraged. Like, for instance, there are many industries where the duty tariffs, the customs valuation for raw materials are higher than the finished products which are coming in. And despite this being raised at various levels, I don't think enough attention has been given, because we're largely looking at the export of products. So I think import substitution, I feel, is something which we've been missing out on, and where employment could be generated. And what you said is very important: sustainable employment, sustainable growth, which will come from import substitution, because we are largely an importing nation. Thank you.
Wow, lots of questions for you. And I'm going to add one more, because our audience has asked online, from following on YouTube. We made this smaller meeting on purpose to make sure that we comply with COVID regulations. And I wanted to give a chance. Some of the questions have already been addressed by yourself and the governor. But one question was about your reform of the last 2-3 years. What did you learn from GTP2, and what are sort of the early results that you're seeing is one question asked. Another one is, and I see people in this room also, there has been new sources of growth identified, and specifically tourism and mining have been added to an emphasis over a longer period of time that didn't pay as much attention. They were raised all the time, but not as much. So your plan includes these two. If you could say a few things about that. This was a question that was forwarded as well. And I will stop here. So when you finish, we will end. So I will pass on the microphone to you.
Okay, thank you so much for the questions. They all are really good questions. I'll try to yes, address them one by one. Enoch, you know, the point you mentioned about shared prosperity and then, you know, the financial inclusion, how unbanked we really are compared to the our counterparts, even countries which have comparable level of development with us. So are we really capable of doing that, considering the distortions that we have in the market, you know, interest rates, this and that. So, yeah, that's why we really needed the homegrown economic reform. You know, the goals and targets that we set on the 10-year development plan really needed the homegrown economic reform to come really first, and then kind of create level ground for and really change the policies that needed to be changed, bring in policies that were non-existent, which should have been there very long time ago, and really change the structural bottlenecks that we have in the market. But it won't be as easy as, you know, we say it. Later on, I will come to, you know, some of the, you know, the achievements that we made the last 2 years in implementing the homegrown economic reform. But this all really needs to be addressed, and, you know, the capacity of the government will be built in the process, but we cannot wait till, you know, everything is changed and then again start, you know, working on development. We have to do things parallelly. So, for instance, the promises that, you know, when we say 10-year perspective plan, we are making promises to our citizens, yeah, to our people. On that promise, we set a huge ambition, and we managed to bring lots of people on board, you know, with the consultations we have done the past few months. Then on that promise, you know, when we say we want to see Ethiopia become an African beacon of prosperity, we also set out how we are going to measure our successes. We won't be saying Ethiopia grew by 10%, you know, per capita income is such and such. Of course, these are important indicators, but we also put other important indicators, very difficult, but as a government, we are really committed, and, you know, you can see that commitment from the, you know, very beginning. Even if it won't be easy, but we really want to see this development process bringing meaningful, you know, change in the lives of our citizens. That's why we want to measure the human development, you know, indices. We want to measure multidimensional poverty indicators. So we won't be measuring only income or consumption, you know, poverty levels, not head count ratios, but we want to measure, you know, for instance, the liter of water per capita, which is really being used by, you know, an average family in urban areas, an average family in rural areas. We really want to make sure, you know, universal access to electricity is achieved. You know, such promises will definitely push us as a government to work, you know, far and beyond the usual way of doing things. And so again, as I've mentioned earlier, our pillars and our goals that we set out on our 10-year perspective plan are not only economic related, they also talk about institutional transformation, which really speaks to the capacity of the government. The public service, for instance, the capacity of the public service in handling such huge ambition. So we're going to implement lots of reforms in that area too. So yeah, economic and other reforms which are underway will definitely be able to really upskill the government's capacity, and then will be able to deliver more and better, in the years to come. Structural transformation won't be realized without, proper focus in terms of financial access to the agriculture sector as well as the manufacturing sector. And a friend from a participant from the audience also mentioned about that being as one of the constraints. So yeah, when again we put the shift in source of growth to such sectors, agriculture, manufacturing, we really mean that all the policies, and other enabling, environments should be created so that these sectors really play the role they are supposed to play. For instance, in agriculture, Penok, you also rightly mentioned it, so it has never been financed well. We have been talking about agriculture for long, but we are still using, the very primitive way of doing our agricultural businesses, doing our farming activities, so it needs huge shift. Even if we were saying agriculture is the major, or the backbone of the economy, we have been giving incentives to other sectors, in the economy, and we have been taxing, agricultural inputs very huge. So such things need consideration, and that's what the homegrown economic reform is doing. For instance, hundreds of agricultural inputs, technologies are now coming duty-free. So these are really some of the important moves toward this supporting the agriculture sector. Most of the investment, again, comes from the private sector, but the government really needs to support in availing, in really redirecting the finance flow towards this sector. It's not only, but the governor earlier mentioned about the new directives that really helped the farmers, to really use their cattle as collateral, their crops on the field as collateral to borrow. The rural financing and insurance issue really would play a great role in transforming, in modernizing agriculture, and we are really seeing the results in some of the regions. And the other is, it's not only the availability of credit, but other fiscal and monetary policy supports, like for instance, I mentioned about the duty-free related incentives to agricultural machineries, mechanization machineries, and also foreign currency allocation too, because for now we have to import lots of inputs. We have to import factories, to say yes, the list. So in that case, the foreign currency allocation should also be really mindful of, the work that we have to do in the agriculture sector. Same is true in the manufacturing sector too. lots of support is needed. But in those areas, again, I want to really address the question that was raised about the shortage of inputs, because we really depend on imported inputs, and that has to change. You know, COVID has taught us a lot. Even if we had money to import, sometimes it was not possible to import inputs because lots of markets were blocked. Something happened in the areas of like the coal. Our manufacturing industries that use coal as a source of energy used to import coal from abroad, but it was not possible during COVID time. We have lots of coal resources, lying out there. They really complain about the quality, but, it was not true. Now that is substituted and they are using local coal for their, manufacturing industries. So shortage of input should be addressed, of course, and there are inputs that should be imported, at least for now, but there are inputs that can be substituted from here, and if our industrial policy as well as the directions that are set out on the 10-year perspective plan clearly state that, manufacturing industries that use local inputs, that have higher local components will be given better incentives. So that's how you really encourage import substitution. And so yeah, of course, structural transformation should happen, and the government should do the policies, the legal frameworks, change all the way of doing things, so that enabling environment is created for it to happen. Yes. The other question, yes, access to investment, in the, when the domestic private sector want to invest in the energy sector specifically was mentioned. And again, when the domestic private sector want to access external finance, at the moment, the situation that the country is in terms of, the debt sustainability rating, it's really difficult. Even if we really open up and allow the private sector that operate in the country called Ethiopia, it would really be difficult to get access to finance because of our credit rating at the moment. But we can't continue like that. We are opening up, as a part of the homegrown economic reform. So we are now looking for ways to really have alternative source of financing, as I mentioned earlier, about, like, for instance, equity financing, establishing capital markets, and also really, capital flows naturally when you create that environment which is really predictable, which has predictable laws, policies, and proper incentives and mechanisms are in place, so capital will naturally flow. But we really need to do that first before being able to access foreign capital, and I think we're on the right direction. It won't be easy. The domestic private sector is really I can say, needs reinventing, it's really infant, and the way we handled it the past how many years was really difficult, and the government and the private sector had that complicated relationship. So now, that needs to be cleared, and sure, very soon. The Ethiopian private sector and the Ethiopian economy will be able to position itself in the global value chain, in which case, as I mentioned earlier, the capital will naturally flow, and yes, it won't be a problem. So in principle, that should happen.
Dr. Fiscal, before you move on, because behind all of these questions is lurking the question of exchange rate policy. We have seen quite a bit of faster depreciation happening over the last year. Where is this going? I think there is a stated objective, but it would be good to hear what the current thinking is on that, because it is affecting competitiveness, it is affecting growth, it is also partly behind the inability to borrow from overseas, it is behind the stagnating exports of the last decade. There's a lot of issues behind it. If you could also address that, it would be very good.
Oh, now you have sent the governor home and you are asking this question. Yeah, good question. Yeah, in fact, the foreign exchange policy that we had really one of the signs of the distorted market that we have, and it's really affecting the competitiveness, as you have mentioned earlier. But, if you really go deep into the Ethiopian economic structure, how much are we ready to tap into, the export market, once this, for instance, once the foreign exchange rate regime is really led to the market. That's really one important thing we have to work on, because for instance, if we are thinking of our coffee, if we have a floating foreign exchange regime, then we'll be able to export better, and because our coffee is selling better, in the country than abroad. But we have to have enough coffee that can take advantage of, the exchange rate policy change. This is the, just in principle, but normally the foreign exchange regime we have needs to be corrected. That's why, that's also part of the homegrown economic reform. The ambition is, to have, to ultimately have a floating foreign exchange rate regime before the 10 years time. The homegrown economic reform had 3 years as a planning time, but the COVID and other, related domestic issues are putting a bit of challenge on really, can we really able to achieve, the targets that we have put on the homegrown economic reform. But the government is really committed to clear the distortions on the exchange rate regime. And you have seen the commitment, yeah? So it's crawling toward this really minimizing the, the premium between the parallel market and the official exchange rate. And we really believe that's the way to really bring competitiveness to, if we have to trade, if we have to export, definitely that should happen. And now the manufacturing sector export is also picking up, so we really need that to happen. So believe me, it will definitely have a floating, exchange rate. Maybe in 3 years' time, maybe in 4 years' time. It all depends on how, the world really rebounds back from this COVID and the things that really happen in the country. If we really manage to increase production and productivity and really work on those supply side problems, it really requires floating exchange rate, because we'll be having surplus production and we want to sell and we want to be competitive in the global market. So that should happen. And yes, and yes,
I think that was quite good. Then the remaining will follow up with
yes.
the governor.
Yes.
I think we could start closing off now, since I don't want to keep you here too long, and our time is also running. I know there's a lot of big questions.
Yes, so I can address few of them.
Sure.
Yes, let me just, yes, someone asked about the Continental Free Trade Area, and if it was really taken into account while crafting the 10-year development plan. Of course, it was, considered, and again, that even we are fast-tracking the WTO accession, that was also considered, and also other global agendas. The SDG, Africa, we want, these all global agenda are really considered in crafting the 10-year development plan. That free trade area should be taken advantage of when it happens, yeah? So for that, we have prioritized which manufacturing sectors, for instance, we are going to focus on. The food, textile, the pharmaceutical industries are given priority in the first 5 years, and then the upstream industries in the next 5 years. So such considerations were made. Yeah. The skills agenda, it was a comment. I will take it as a comment. Yes. Yes, someone asked about the import substitution. How seriously was it considered? Definitely, it was considered. It's being done seriously with that thing in mind. But we have to prioritize. Now we are working on, for instance, import substitution in areas of agricultural products. For instance, wheat. We successfully made that. Really, it's happening very fast, to be honest. And Mr. Umar is promising to really stop importing even this year, if I'm right. Dr. Antana is there from Ministry of Agriculture. We were planning for 2-3 years, but I think we are going to stop importing wheat very soon, if not this year, yeah? But also other products like edible oil and other areas too. So yes, but there is lots of policy inconsistency. You want to substitute imports. At the same time, there are policies that affect the competitiveness of, the products that are produced domestically in the market. So that needs to be addressed. So that would be part of the reform process, and we really recognize that, and it will take a few more years, few more months, depending on the type of the problem that we have at hand. So yeah, that is really recognized. The questions that came through online, yeah, what are the results? For instance, in the last year alone, more than 60 directives from National Bank. Yes, some improved, some new issued. So this was part of the homegrown economic reform. The investment proclamation, other legal reforms, policy change, these all were the success stories. The impact will be seen, in the years to come, but lots of work has been done in areas of improving the policy framework, the legal framework of the whole system. Again, in the real sector, we have import substitution efforts really being undertaken successfully, especially in the agriculture sector. So that's one thing. In the mining sector, for instance, the export from gold has picked up like about 900% compared to the last couple of years. This was because the improvements in the policies in the National Bank on gold prices and this and that. So there are lots of things that can be mentioned as success stories. Tourism, mining, yes, they are considered as new source of growth. They, for instance, if you take tourism, it has really a good potential to create huge job opportunity. It has that distributive capacity in terms of really trickling down the benefits that, or the development in the sector. It has that long value chain. So tourism is really important area to work on if the government really want to bring inclusive development, shared prosperity, but at the same time, as a source of growth, that's the area we haven't touched, where huge potential is there, untapped potential, you know, historical, cultural, natural potential is there, so we have to tap into that. So that's why it's considered as a new source of growth. Mining will also play its role in this area, if not job creation, but you know, in the import substitution, in you know, objectives of the government. If you take the construction industry, about 60 to 70% of, especially the finishing materials, are imported, and huge foreign currency is invested in it. But we have all the resources, the raw materials that in the mining sector that can be used to produce those finishing materials in domestic industry. So one of the biggest role of the mining industry would be import substitution, producing industrial products, and also, in fact, we have to pick some of the golds we have and other precious materials we have, and we have to sell and bring some dollars, of course, but we have to focus on using the mining, the minerals and the resources that we have in the country to really support the structural transformation. For instance, produce fertilizer in the country instead of investing huge to import fertilizers, because we have all the inputs required to produce fertilizers in the country. So yeah, the mining will also have its own role, new role, as well as continue to be source of foreign currency. Let me stop there, I guess.
Okay, thank you so much. Ladies and gentlemen, there you have it. A government growth policy that depends on you and puts a premium and an emphasis on that partnership. I think it is sort of early days, but I just want to underline the importance of engaging on these policy measures and making sure something on the ground happens. We've been saying the private sector needs to be at the front, but then when the private sector is at the front and the private sector is not acting, that actually invites reversals. I've seen it in policies of other countries also, where the government will always be impatient for results because the government has to be accountable to the public for delivering development. And when we're talking about private sector leading that is not only an opportunity, but it's also a huge responsibility for us to engage. With all these policies that are coming online, there are many that are still not up to par, that are not making it easy for the private sector to invest. But the government side is not going to know that on its own. You heard the governor this morning saying we've opened up here and here, we're not seeing enough movement. We need you to engage. So I would be remiss if I did not mention this. The times are changing. We need to engage. You should all engage. There are many opportunities, especially when it comes to engaging most of the population out there that has not been engaged as effectively. In the financial services sector, in inclusivity, in tourism, which is the largest employer in the world and could afford many jobs for Ethiopia, but also quite a bit of foreign currency that could come in. So that, and then I think we keep repeatedly hearing about the seriousness of the rebalancing, which I'm hoping over a short period of time starts to show that the old days of a system that incentivizes imports will actually move towards incentivizing exports. So this is probably the time when we should all start thinking about export-oriented, because there will be, you know, I've been very vocal about this. We've been talking about an export-led development plan for a long time, with export not being profitable. And for private investors, the signal is if there's no money in exports, we don't invest in the capacity to export. And that's what's going to allow us to correct the foreign currency imbalances over time. So maybe we should start taking it a bit more seriously, that the signals are all there, that we should start to invest in more competitive-based and more export-oriented businesses as well. So I just wanted to add these. And I would like to thank you all for joining us early this morning, both online as well as in person here. And I would ask you to thank our distinguished audience, the governor who has left, but also Her Excellency, the Minister in charge of Planning and Development, Dr. Fiscal, for spending so much of her time explaining all of these complex issues to us. Thank you so much. I would say stick around for a few minutes and network. I know a lot of you have not seen each other for a while. Thank you.